Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 11th, 2026. Let's dive in.
Market overview. It's looking like a bright morning for the Indian domestic indices. If we look at the GIFT Nifty, it's currently trading around the 26,058 level, which is a premium of nearly 90 points from the Nifty Futures previous close. This suggests we are in for a gap-up opening for both the Nifty 50 and the Sensex. This momentum follows a strong Tuesday, where we saw Indian benchmarks extend their rally for a third straight session. The real story lately, however, hasn't just been the blue chips. Small-cap stocks have been on an absolute tear in early 2026, with some rallying up to 28% already. Investors are clearly back in a risk-on mode, hunting for value after a relatively dull 2025. We are seeing specific buying interest in Nifty 50 heavyweights like Mahindra & Mahindra, Titan, and Eicher Motors. However, a word of caution for our traders. While the indices are near record highs, the overall market breadth remains somewhat weak. This means while the big names are pushing the index up, not every stock on the street is participating in the party. In the F&O space, we're seeing some aggressive positioning, and with the GIFT Nifty crossing that 26,000 psychological mark, the bulls are definitely in the driver's seat this morning.
International markets, switching gears to the global stage. Joe, the international sentiment is a fascinating mix of caution and record-breaking runs. Over in the US, the Dow Jones Industrial Average managed to hit a fresh record high, but it wasn't a clean sweep. The tech-heavy Nasdaq and the S&P 500 are feeling the heat as investors digest some weak retail sales data. While weak sales sounds bad for the economy, Wall Street is actually viewing it as a green light for the Federal Reserve to finally cut interest rates later this year. In Asia, the picture is even more dramatic. Booming Asian markets are currently widening their lead over both the US and Europe. Japan's Nikkei 225 closed at a record high yesterday, fueled by what traders are calling the Takaichi trade following Prime Minister Sanai Takaichi's landslide victory. Meanwhile, China is dealing with a bit of a mixed bag. Consumer inflation rose less than expected in January, and producer prices are still stuck in deflationary territory. Moving to commodities, we are seeing some historic moves. Gold is holding steady, wait for this, above $5,000 an ounce. That is a massive level that seemed unthinkable a few years ago. In China, we're seeing a silver squeeze as industrial demand for green tech drains stockpiles. And in the energy markets, Brent crude is edging higher as geopolitical tensions surrounding Iran eclipse news of rising U.S. inventories. It's a volatile world out there, but for now, the momentum is firmly with the Asian markets.
Business story. India. Coming back home to the Indian corporate landscape, we have some heavy hitters in the news today. As I mentioned earlier, M&M, Titan, and Eicher Motors are the key stocks to watch. We're seeing a significant rotation into the auto and consumption sectors. Interestingly, BHEL and Grasim are also seeing high volume, likely due to the government's continued push on infrastructure and manufacturing. But the real under-the-radar story is how Indian retail investors are shifting their strategy. With the stock market feeling a bit toppy to some, we're seeing a massive surge in Indians loading up on gold and silver ETFs. It seems the average investor is hedging their bets, worried that the current mojo in stocks might face a correction if geopolitical or currency worries persist. We also need to talk about the stealth easing happening via the RBI. While the central bank has officially held the key repo rate steady, they've been infusing large amounts of cash into the funding markets. This has pushed overnight borrowing rates well below the benchmark, which is a huge hidden win for banks and NBFCs. It's essentially a rate cut without the headline, and that's a major reason why the Nifty is sustaining these levels.
Business story international. On the international corporate front, the theme of the day is AI anxiety and some disappointing earnings from legacy giants. There's a new trend on Wall Street that traders are calling the AI crosshairs trade. Basically, investors are dumping any company they think could be disrupted by AI. This hit financial advisory firms and wealth management stocks particularly hard yesterday, as fears grow that AI tools might replace traditional human advisors. In the earnings world, it was a rough night for some iconic names. Ford reported its worst quarterly earnings miss in 4 years, though the management is trying to guide for a better 2026. The ride-sharing giant Lyft saw its stock tumble 15% after disappointing fourth-quarter results and lower-than-expected rider numbers. Even the toy industry is feeling the pinch. Mattel shares plunged after their holiday results missed estimates, leading to a very cautious forecast for the rest of the year. On a more unusual note, the Vatican Bank has made its first foray into equity indexes. They've launched 2 indexes that track 50 stocks aligned with Catholic teachings, signaling a potential move into the ETF market. And finally, in the world of high-frequency trading, jump trading is reportedly taking stakes in prediction markets like Kalshare and Polymarket. This shows that the line between gambling, prediction markets, and traditional finance is blurring faster than ever.
Economics and geopolitics. To wrap up the macro picture, the world is watching the U.S. jobs report coming out later this week. That data, combined with the recent weak retail numbers, will dictate whether the Fed pivots or stays hawkish. For India, the geopolitical landscape is looking cautiously optimistic. The sentiment around a potential India-U.S. trade deal is providing a strong tailwind for our markets, even though the threat of new tariffs for the Trump administration remains a looming shadow. We're also seeing a flurry of activity in Europe. Australia's trade minister is currently in Brussels for the final stretch of long-running trade talks with the EU. Both sides are desperate to sign an agreement to tighten ties in what they call an increasingly unpredictable global environment. For India, these shifts in global trade alliances are crucial as we position ourselves as the preferred alternative to Chinese manufacturing.
Key takeaways. So, what should you keep in mind as the opening bell rings? First, the Gift Nifty is signaling a strong, positive start for Indian markets, so expect some early morning bullishness. Second, keep a close eye on the auto and infrastructure sectors. M&M and BHEL are key barometers today. Third, don't ignore the commodity rally. With gold over $5,000, the metal-linked stocks and ETFs are more than just a hedge, they are a major performance driver. And finally, be wary of the AI crosshairs. If you're holding traditional service sector stocks, check if they're being swept up in the global sell-off of firms deemed at risk from artificial intelligence. It's a market of themes right now, so stay nimble.
That wraps from today's update. I hope you gained useful insights.
Add your thoughts and comments and follow for more such updates. This is Sarah.
And Joe, signing off.